Thank you for your attention. Today we are having our discussion on manufacturing account. Now, manufacturing account, the type of account which is prepared to determine the cost of producing a product over a given period of time. Before establishing the price of the product, we must know what is the cost of producing it. Now, elements of manufacturing account. 1. The manufacturing account shows the following cost component. 1 is cost of raw materials, 2 is cost of labor, and 3 is cost of overheads. So with the 3 costs of manufacturing, you will be able to establish the cost of producing a product. Now, terminologies of manufacturing account. We have 1, raw materials, the product in its raw form. 2, we have cost of raw materials. When you add stock purchases less closing stock, you get cost of raw materials. Prime cost, it is the summation of cost of raw materials and direct expenses. Factory expense is the expense which are incurred when producing a product, which is the cost of overhead. Work in progress, they are products which are neither raw or finished but nearing completion. Factory cost, the cost which is incurred when producing a product. They include prime cost, factory expenses, and difference between work in progress. Cost per unit. When you divide factory cost with number of units produced, you get cost per unit. So this is the cost of producing a product. Now we move to the formatting of manufacturing account. In the format, we have manufacturing account for the year ended, date, month, year, stock of raw materials, you add purchase of raw materials, you less raw materials, you get cost of raw materials, then you add direct expenses, you get prime cost, then you find factory expenses. So factory expenses can be power, royalty, depreciation of plant. When you total, you get the factory expenses. Then work in progress, opening, less work in progress closing, you get the difference. When you add prime cost plus factory expenses plus difference in work in progress, you get factory cost. So that's how you prepare manufacturing account. After preparing manufacturing account, you're supposed to prepare trading account. Now in trading account, we have for the year ended, date, month, year, sales, XX, less return inwards, you get net sales, less cost of goods sold, whereby we have finished goods opening, add factory cost, you get goods available for sale, less finished goods, you get cost of goods sold. Now net sales minus cost of goods sold, you get gross profit. Add other incomes, you get net income, then less all expenses, which can be sales and distribution expense, administrative expense, repair and maintenance expense, financial expense. Now, when you say net income minus indirect expenses, you get net profit. That brings us to the end of the formatting. Now, we want to take a question which will help us in solving a problem as far as a manufacturing account is concerned. So this is the question. We have inventory, raw materials, work in progress, finished goods, sales, direct labor, purchase of raw materials, administrative expenses, inventories, raw materials, work in progress, finished goods, factory overheads applied at the rate of 110 of the direct labor. The required: 1. Prepare manufacturing account. 2. Prepare trading account. And then 3. Prepare trading profit and loss account. Now, our solution. So in manufacturing account, we have manufacturing account for the year ended 31st December 2019, whereby our stock is 64,000. We had purchases 240,000. You get 3 or 4,000 less closing stock of raw materials 56,000. You get cost of raw materials 248,000. Direct expense, we have direct labor, which is 142,000. When you total this, you get prime cost. Our prime cost is 390,000. Now, factory expense entails: 1. We have power 10,000. 2. We have royalties 12,000, which is giving us 12,000. Work in progress is 50,000 opening, less work in progress closing 48,000, you get 2,000. Factory expense, factory cost will be prime cost plus factory cost plus difference in work in progress. What we get is factory cost, which is 414,000. After preparing manufacturing account, we are now supposed to prepare trading profit and loss account. Now, in trading profit and loss account, you start with the title, and then we have sales. It was worth 729,500 less return inwards, which was 5,000. You get net sales 724,000 less cost of goods sold, which is giving us finished goods, which is 96,000. Add factory cost, which is 414,000. You get codes available for sale, which is 510. Less finished goods 104,000, you get 46. Net sales minus cost of goods sold gives you gross profit, which is 318,000. Add income, which according to our question, we have no net income. We have no other incomes, so our net income will remain 318,000. Expenses, we have sales and distribution, which is 50,000. We have administrative expenses, which is 60,000. Discount allowed 7,000. When you total, you get 117,000. So we have net sales less expenses gives us the gross profit, the net profit, which is 201,000. Now that brings us to the end of the preparation of manufacturing account. Thank you and see you then.